Traders, how's it going? Nick from Vant Trading here, coming at you with our weekly prep here. It is Monday, February 21st. The markets are closed, but we are in for what is sure to be a crazy 4 days of trading coming up here. It is almost the last 4 trading days of the month. I'm pulling up the futures here so we can kind of see what to possibly expect going into tomorrow, because futures are already open for trading. And we've got some serious stuff going on. I expect some weakness in this market this week. Now, obviously, headlines could bail us out, but I'm going to take a look at the market, talk about some of the upcoming economic events and headlines, what we're expecting in some of the top stocks in play. I want to try to keep this as brief and entertaining as possible, so I'm going to keep on plowing ahead here and try to burn through. Taking a look at the E-mini futures, we are trading below Friday's lows here, and that is because, if you haven't been paying attention, we've got continued escalation between Russia, Ukraine, and the West. So that is continuing to rise. The rebels in eastern Ukraine officially fled to Russia, and now it looks like Putin has officially declared, quote-unquote, peacekeeping operations in the breakaway regions of the UK, which means Russia is going to try to establish military bases in the eastern Ukraine. Now, there is a tentative agreement for Putin and Biden to meet this week. I don't think we've really heard anything concrete yet, which is why tensions are still high. And even if so, these two parties have met several times. This means that there are going to be some serious sanctions coming out from the West and from the rest of Europe, most likely, towards Russia. This is a big deal for both sides here, and it's going to cause some tension. It's going to cause some uncertainty in the market, and the market hates uncertainty. Goldman even came out and warned that if this continues to escalate, there is some severe downside potential in the markets. Now, we also need to remember that we are severely bearish out there in the markets in general. AAII, one of the most bearish reaches we've seen, with under 20% bullish. Goldman came out and has talked about the put volumes out there as a proportion of total single stock options up to the highest levels since April of 2020, aka COVID implosion. So you've got a lot of bearishness out there. So we could be a little squeezy, we could be a little volatile during trading days, especially on headlines. So be careful. Goldman obviously also warning economy may be slowing more than expected. So you've got domestic growth slowdown. You've got Fed expectations coming. I'm sure we'll hear from Bullard more, because he seems to love to talk his book up in terms of how aggressive the Fed needs to be. Don't get me wrong. I still have zero expectations that the Fed is going to hike 7 times this year. All the analysts who are predicting that are either batshit crazy or think that the Fed is going to go full Volcker. But regardless, we have a more hawkish Fed as well. So a lot of just negativity swirling around. And also, China over the weekend imposed sanctions on several U.S. companies over the reaches in Taiwan. So now you've got those tensions flaring back up again. A lot of foreign pressure as well as domestic pressure all coming ahead here. Now, I'm going to be a contrarian. Yes, I'm not saying that this means buy this stuff, but we need to be careful when every single headline out there reads doom and gloom and bullish and bearish implosions in the world and in society as we know it, because that tends to be when we see some crazy rallies and short squeezes. But, we'll see where we are by Monday. We'll see as the headlines roll where we'll be. So that's what we're looking at. So E-mini, switching over to the SPY here, we're trading at just below 4,300, 4,289 in the E-minis, which means we're trading about right down here in the SPY, right pretty much at this important pivot point in the SPY. We'll see where we are, by the open tomorrow, but this is an important level here. If we drop this out, your next level is going to be this low here from this dip, which also was a little bit of a dip buy in the SPY last time here in July when we touched the 50-day SMA, and we're likely going to continue to slice through those. So those are your first 2 levels of defense that we need to watch. Now, also, obviously, depending on how low we gap down, we could see gap rules apply, but those are your first 2 stacked levels. Then you've got a bit of a gap here, and your next big level is 410-ish, 411-ish, and then after that we'll be approaching the all-important psychological $400-ish level. So pretty big levels coming up here. If I go to, let's just go to the last year here, and what I'm going to do is I'm going to do a little fib level from where we poked out at, we are reaching the 50% retracement level. 50% retracement level from the beginning of 2021. The lows of 2021 is this low right here. So keep that in mind. We are almost going to retrace 50% of the move from last year. Now, taking a look at the Qs, where we've seen even more weakness obviously showing themselves. If they end up gapping down like the SPY, we're below support. We are below important levels. And, maybe you get a little support here at that 334. And then if you're lucky, if we end up down here 316, maybe that'll hold. So we've got tech and growth just continuing to show weakness. And I don't expect that to reverse anytime soon, because growth is going to underperform. Even without the Russia-Ukraine headlines, we're going into an interest rate rising environment and an economic growth slowdown, which is going to cause a recession potentially or stagflation. And so now you've got this is the environment where growth is going to underperform. So Q's not expecting much in here, and if we pull up, in which we will, the big boys in the tech sector, they're all looking equally bearish. IWM, meanwhile, looking at the small caps and those value plays below $200 a share, broke those ascending lows. Now you're going to get that flush out. I'm definitely going to watch this little bounce point here around that 195, and then after that 190 is going to be a big level, and then after that we have to zoom out a smidge here. This is tough because you don't have any really aggressive levels. 170 is going to be your biggest level, but you do have inflection points within there. Not saying we're going to just dive straight down. And then taking a look at the Dow Jones, you're seeing the exact, let's just go to DJX. There we go. You're seeing the same kind of weakness. We're likely going to be taking out some of these key supports, and it's going to be a lot of scariness out there. So we're going to see. Headlines are still coming. This is the issue with trading this market right now, unless you stick to your guns, like we know some of our traders who watch us every day. Mal, a couple of you guys, I want to give you shout outs because I know you've been the resident bears here, and this is your time. And to have that conviction, you're going to have to probably sit through some nasty headlines in both directions. This is a very headline pro market, so just be careful. So I would obviously expect volatility to continue to elevate. It didn't really show that much strength going into the end of the week, so this is going to be an interesting week to see if volatility can start picking itself up. Looks like 20 is going to be the new 15 in terms of the VIX bounce rate, and so we're going to see if volatility continues to pick up as well. So what are some of the expectations coming up here this week in terms of economic events? Well, tomorrow you have Case-Shiller Home Price Index at 9 a.m., PMI Composite Flash at 9:45, and the Consumer Confidence at 10. Some decent numbers, nothing too serious or market breaking. Wednesday is going to be your Red Bookstore sales and 5-year note auction. Thursday is going to be pretty important because we have GDP numbers. Now, GDP number is going to be that quarterly number. It's going to be very important for that gross domestic product number. You'll get your jobless claims, your new home sales, petroleum, nat gas, and so on. But I think 8:30, that GDP number is going to be the biggest one that we'll see this week. And then Friday, we do have other important numbers. You have the PCE deflator, personal income and outlays, the Fed's favorite inflation tool. So we're going to see if that reflects the insane inflation numbers we're seeing from CPI and PPI. You also get durable goods, consumer sentiment, and the pending home sales. So you get some pretty decent numbers here. These are going to be some of the bigger numbers going into the next Fed meeting in March. So this is going to be the last time we see some of these numbers before the Fed, and this is all they're going to have to work with, so keep that in mind. Now, before we dive into earnings and stocks that I'm watching in sectors, let's take a look at some of the commodities. Taking a look here at oil, I have zero reason, and I've said this, I think every day for the last, I don't even know how many months, I have zero reason to be bearish oil. You should have zero reason to be bearish oil, especially with the Russia stuff. Even without the Russia stuff, in my opinion, inventories are insanely low. You've got OPEC, who is showing no sign of upping production. They're the only ones who could really combat this. The Fed has zero control over oil prices, let's be honest. You also have insane, voracious amounts of demand for energy right now from countries out there and governments, just especially going through this cold winter. So I really don't see oil ever getting a little bit of a reprieve here. In fact, I could see us going to 100 relatively quickly. We've bounced off of a pretty decent support here around that 89-ish. So definitely expecting bullishness personally, and I'm not saying buy. I'm not giving investment advice, is my opinion here, but this is a nice little bounce off here, and it's looking good. Now, we could form a head and shoulders. We'll see. We'll see what happens, but so far looking strong. Gold, obviously, you've got a lot of people flocking to safety. Gold getting a nice little pop here. I'd expect further rotation into this personally with inflation numbers. You're going to get some inflation numbers this week as well, and if there's any concern about weakening in the dollar amid all of these tensions abroad, so keep an eye on the dollar because it's holding up relatively well, but that's going to remain to be seen how it continues to hold. So watching the dollar and gold as well. No real opinions on that quite yet, but we will have to watch. And then last but not least, our boy crypto. Crypto is getting shellacked. I don't expect this to ease anytime soon either. It looked temporarily attractive here, but it never was able to really hold, never broke out. Crypto is going risk off. This has been a very risk off indicator. It has not been an inflation hedge. And you actually had the Ethereum founder and head out there talking that this is a good thing. It's shaking out the speculators in his opinion, long term. He's looking at Ethereum as a future currency, obviously, and it's shaking out the speculators and the day traders, and it's going to allow the buy it for lifers to really establish themselves and get cheaper. So we'll see when crypto can stop. It's breaking levels on the way down. You've got nice support here coming up around this 35-ish thousand. I personally don't expect that to stop. We're probably going to see 30,000, this latest drawback from last summer, but we will see what happens with crypto. Obviously, otherwise, kind of in a big ass range here, so we'll see. So that's your commodities, that's your market. I'm just going to loosely talk some of the stocks and earnings we have coming up here. Some of the stocks that I'm watching, I'm obviously going to watch the big boys. I'm talking stocks like Tesla. Tesla looks like it's ready to finally give up, but we'll see. People have bought this. They've bounced it. They've faked him through to the 200 several times now. So we'll see if the 850 and then the 800 all in here can drop, and then we'll probably start to see some further dropping there. But this thing just can't bounce, and it bounces lower and lower and lower. I honestly, if the market really does start to implode, Apple is the safe haven for institutions, but it is not immune to market pressure. So you may get extra profit taking in here as people we've got an over-leveraged market, and as people are hit with margin calls or are forced to liquidate positions, they are going to need to sell their winners and their overperformers to make up for those losses, fix their capital requirements, and so on. So you may see even the big boy, the OG in the market, the one holding the most value right now, Apple, it may start to see liquidations as people need to protect their other investments. So just keep that in mind. No one's immune to a market implosion. Not saying we're going to have that, but it's something to remember. Now, looking at some of the non-big boy stocks, because obviously you look at any big boy, Tesla looks weak, Microsoft looks weak through the 200-day, Amazon's already giving back its earnings pop, Netflix never even regained its earnings drop. You've got a lot of weakness in the FANG gang, but what are some of the other stocks I'm watching? Well, obviously I'm going to continue to watch some commodity plays out there. Alcoa, the aluminum play, has been raging hot over the last couple of weeks, or really just the month of February. I don't see that subsiding anytime soon. You also have, if you just look at any commodity play, DBA, I know some of our guys love that agriculture ETF. Commodity plays continuing to show price increases, continuing to look hot. That is a potential here this week. I'll also be watching some of the consumer staple brands, so also the ones with high dividend yield. So I like Verizon. It's breaking out right now. I'm in personally, and I think that this could be a long-term 5G play, also a play breaking some of these descending highs. I want to see it above the 200-day, though, so I'm still a little antsy on this one, but it's bucking the trend of the market. Also, Conagra Brands, another one, same kind of situation in terms of consumer staple, decent dividend yield here, and it's breaking out over the 200-day. I like this stock in terms of the technicals that I'm seeing. We'll see if it can hold up value. Same with Cisco, 5G play, kind of like Verizon, just had good earnings. Now it's through the 200-day and a decent dividend yield as well. So Cisco continues to look pretty good as it's through some key levels here. So I'm going to look for some follow-through in some of these, though they will be affected if the market drops, and I'm going to be very cautious with some of those plays like the Procter & Gamble's, the PepsiCo's, the Mondeleze's, the General Mills, my usual dividend safety haven. So that sector is going to be very interesting to watch. Some of the day traders that I'm going to be watching that I already know might be in play. First is going to be KPTI, a momo play from Friday. I might look for some opportunity here on Monday, depending on where we're trading, what the situation looks like. This might be a failure point, or it might be a further breakout and squeeze point. We'll see what we get on that. It's a little thinner. It's a therapeutics company. I'll also watch the Trump SPAC because the Trump social media app actually launched on Monday. Experienced some partial outages on launching, but let's be honest, that's as much as I may make fun of it and make fun of him, that's normal in tech for there to be outages and issues. The issue, or what we need to be watching, is does that persist? How serious are these outages, and what are we going to see here? What was the actual user base on launch? So this may be in play this week with the launch of that app. We'll see. Two stocks that are kind of YOLO for me: BPT, BP Royalty Trust, on oil and gas. I like how it's flagging in here and kind of taken off, and PRT flagging in here nicely. I'm just loosely watching these. Nothing too serious. They're very thin. I wouldn't advise them, but it's something fun for me. Some other stocks I'm watching, I'm going to watch some follow through plays in some of the earnings losers out there. DoorDash, feeling like it just gave back some of that pop in there, and now it's sitting back at this cliff here, feeling like it wants to cliff dive through 94, probably immediately next week. Palantir, a previous Momo winner and darling of the ape gangs out there, lost on earnings, breaking new lows, and feels like that one could continue as well. Roblox, same kind of deal, a meta play, tech play, sexy new play. Even Nancy Pelosi is in this one, but it doesn't make it immune to bad earnings and dropping levels. So this one's going to be interesting to trade as well. Same deal with DraftKings. Sorry to our girl out there, Kathy Woods. That is another ETF that I would imagine to drop and implode over the next coming weeks and months if tech continues to drop. I mean, this is just an embarrassing looking chart here. And DraftKings is one of our holdings, and I don't expect this one to stop anytime soon as well. General Motors looks like it might get a nice little drop here through this cliff. It's a very interesting level. I want to see how it reacts. It's not a good day trader necessarily, but this may be one that I might throw a little lottery play in. I might also watch some of the social media failures. Twitter starting to roll back over after their earnings. Meta has just been imploding and leaking value ever since their earnings, and all of the headlines I've seen on them are abysmal, back approaching $200 a share, and I don't see this one stopping personally. Look at this weekly chart. It gets through here. You've got a lot of room in this body here to potentially see further drops, so I'll watch those social media plays as well. Pfizer's been a relatively good short. I still think, despite it not being insanely overvalued in the market, the technicals here just look relatively weak, so I'd expect some continued selling in Pfizer as the vaccine push continues to subside. I think China plays could also be pretty weak. Alibaba in particular, you had a lot of headlines out there about the Chinese government looking at Jack Ma, possibly imposing more domestic sanctions, trying to do more domestic crackdowns on companies. The market there just had the biggest two-day drop since last July, so we might see some further weakness. Sorry, Charlie Munger, but Alibaba looks a little dangerous here with these headlines. We'll see how it reacts during trading this week. And then, maybe I'll watch some of the defensive plays that might get some pop on the Russian news. So Lockheed Martin, Raytheon. Yes, they did get sanctions from China, but let's be honest, with the war going on, potential war going on, they'll probably get more pop than anything. Northrop Grumman, Lockheed Martin, Raytheon, even maybe Boeing. We'll see how they perform as well. It's going to be a very interesting week for them. That's most of the stocks that I'm going to be watching. Obviously, what else is in play, just to give you a glimpse at some of the earnings this week, and then we're going to wrap this up. Tuesday morning, you'll have Home Depot, you'll have Cracker Barrel, you'll have CMP, which is an energy play, MDT, which is a medical play that I know one of our viewers, Mo, has tried to play before, Macy's as well, and Krispy Kreme, for you donut lovers, is reporting tomorrow morning as well. Tomorrow after the close, you'll get Caesars, which is a nice little reopening casino play, Pan W, so we're going into some of the cybersecurity, Exos, Rig, Space, which is, just been dead for a while, probably will continue to be dead, Toll Brothers, and so we're going into some of the housing sector there, and a couple of others. Wednesday, you'll have Booking, another reopening play that's been doing pretty well compared to the market, Lumber Liquidators, Jack in the Box, Fubo, Hertz, IMAX, Lemonade for the insurance plays, and a couple other retail plays as well. And then Thursday morning, you'll have Alibaba, so we're going to start to get some more bigger China plays and earnings in there. You'll have Planet Fitness for you reopening plays, Papa John's for you food lovers. Also some more earnings plays, Energy, Norwegian Cruise Line should be interesting. Myrna is going to be interesting to see what their vaccine guidance looks like. It really hasn't been good since the vaccines have started, but they still make money on it. Discovery and a couple of others. And then Thursday after the close, you'll have a couple like Coinbase, Dell, Etsy, Oxy for you energy players, petroleum, Autodesk, Beyond Meat, a poor stock that's just never been able to get any pop or buying in it in some time now, and Block as well. And then Friday, I know our friend Bornalam has traded OCGN for a while. Friday, OCGN has earnings. I know they had some good news. I believe Friday after the close, U.S. lifting the clinical hold on one of their new drug applications for their COVID vaccine. So I'm crossing my fingers for you, bud. And also Foot Locker and Li Auto, a Chinese auto company. And that's really the majority of the headlines. We'll talk about this more every day during our morning market analyses videos, and then Tuesday through Friday on 1 p.m. Eastern, we'll have our Vant Rant podcast. So I appreciate you all for tuning in. Good luck this week. Be careful, protect your capital, manage your risk, and as always, safe trading.